Tonight on the Australian Stock Market Show. With reporting season underway, can good news send the All Ords to 9,200 points? Which ASX sectors and stocks are the hottest right now? And are your future dividends under threat? Stay tuned to find out the best ASX 200 high yield dividend stocks to buy right now. Welcome to the Australian Stock Market Show. I'm Philip Tortevsky, and joining me are Wealth Within's professional traders Janine Cox and Pedro Banales, and together we're Australia's most trusted stock market educators. Good evening, everybody.
Good evening. How are you? Excited about reporting season?
I'm not so excited about reporting season, but excited for a very good week on the market. Pedro?
Yeah, definitely. I feel that your sentiment's a bit of a roller coaster ride, but feeling good.
Feeling good, fantastic. All right, well, first up tonight is our hot stock tip, BlueScope Steel. Now, Pedro, I'll let you take that away.
Yeah, mate. Yeah, so this one's one that's fallen out of love in the last couple of years. So let's see if we can show it some love. So on your screen now is market index, and it has a little bit of a story behind it, right? So recently, Trump has imposed tariffs of 25% on all steel coming into America. But BlueScope actually has 5 companies that are working within America. So they're obviously going to be exempt from those tariffs. So I think that this actually has a bit of a positive future, and you can actually see that it is a little bit undervalued at the moment because we've got a PE ratio of 12.21%, 12.21, and the dividend yield a little bit low, but we're going to be looking at some better dividend yields later on.
So you're saying maybe because it is exempt from those tariffs, it's going to add to the earnings compared to the other companies that are going to be...
That's right, yes. Yeah. So the other type of steel companies in the ASX, which actually manufacture here, they're going to be imposed with those tariffs. So someone could do good. And having a look at the chart, it actually looks quite interesting. So let's get into that. I've got the monthly chart on the left, weekly chart on the right, as usual. And I've marked these periods, as you can see in green, of consolidation that it's had in the past. And usually these zigzag moves on the downside are followed by a very strong move up. As you can see, it had here after the COVID low in 2020. It hit resistance around that $26 mark, which does seem to be a strong level of resistance, and I'll just open up the chart so you can see what's going on. Back here in 2006, so this is the power of technical analysis right here, that back in 2006 found support, then pretty much pinpointed that level to find resistance in 2021, then fell away. It's in the same type of manner as it did back here in 2019, and then it came up once again. Now, the rise wasn't so strong out of this move, and that's because the steel price hasn't been doing very well. We've had China's economy, slowing down a little bit. There's been a little bit of uncertainty around it. So we've had this sideways consolidation. But what I like is that it actually hasn't fallen out of bed. It hasn't actually fallen below that $17 critical level.
You're right. You're right. It's so different, though, isn't it? I mean, in terms of your rise up here, it's very different. So does that mean the personality has changed?
It could be, or it could just be a little bit of uncertainty. If you backtest it, and we are going to be talking a bit of about backtesting later on, you'll be able to find whether all of these types of moves are going to be different. And from first looks, it does look like it's changing a little bit. Going to the weekly chart, I've just outlined this sideways consolidation and a little bit of resistance there. So we are hitting a bit of resistance at the moment. You can see that it is closing on the low for this week. It's not over yet, but we could see price rise at least up to that $24 level. And if we manage to get past that $24 level, $26 is next on the cards. And then finally, we've got that nice 95% on the upside if we do manage to get past that $26 level.
Now, let me get your thoughts on that, because that's an interesting projection you've got there. And you said something very interesting before about, because when you look at that chart, it looks a bit indecisive at the moment, right? We can agree on that. But you mentioned a catalyst. Now, when stocks have these catalysts that come into the market, these shifting catalysts, which is the tariff situation you proposed, if that does come into play, this character of this stock can change very quickly.
Definitely.
And is that something that you're keeping an eye on? Is that why you're mentioning those levels? And it could extend that 95% moving forward.
It could, definitely. And if these tariffs come into play and they're there for a long time, it could be a sustained growth. Also, reporting season, it could actually have a bit of a better than projected earnings. So that could be a good spot for it.
Fantastic, Janine.
It looks interesting, doesn't it? The fact that it's come back to test support on that prior high in 2018 is really important, I think, and it's done it numerous times. So, look, I mean, it still could fall away though, couldn't
Yes.
it? If it takes out this recent low here, then, you know, you'd obviously just let it go because it could be
Agreed.
coming back to test this prior low in 2022. But, you know, I think it looks interesting. One to watch, as you say.
One to watch, so you could say it's an almost hot stock.
Almost hot stock. But, I mean, some great points there and some fantastic markers to keep an eye on for this one. But that is it for our weekly hot stock tip. Right now is your opportunity to get involved in the show and have your questions answered. So call now on 0392909988, or you can text your question to the number on your screen. Now, the first caller into the show right now gets a free copy of Dale's book, Accelerate Your Wealth. So dial 0392909988. Now, while you do that, Janine will give her analysis on the Australian market sectors.
On your screen right now is a chart of the Australian market sectors. Now, this is the part of the month that I actually really enjoy, looking at the sectors and saying, okay, what's been performing? What do we think is going to do well over the coming months? Where are the laggards? So if we look at the chart again, we can see that at the top there, consumer discretionary is up 6.4%. Now, some of those consumer discretionary stocks, once the market kicks on again, if there's a rate cut, we could see them take off. If it goes the other way, then that may, you know, cause them to stall a little bit. And remember that in a recording that we did some time ago, and I did some podcasts on this as well, that consumer discretionary is one of the areas that tends to peak first in a market cycle because the spending slows down. So just watch out for that one. But at the moment, I'm not calling it. So we can see here financials is up there as well, around 6%. Infotech, all of the ones that you want to be looking at, financials will still have some further upside. Infotech, I think when some of those stocks that have been falling turn around and bounce, there'll be some good returns in those. Look, you know, we've got, it's early days yet. I mean, we've got 5.7% positive on the upside, but materials is a big one, isn't it? That we're waiting to see what happens there. And healthcare is another one that's down that looks interesting.
Well, I was waiting for you to get to materials because this year we're finally seeing, you know, you've got 6% for financials, 5% for materials.
Yep.
If those two mega sectors run together in unison and we do get energy creeping in with healthcare, then, you know, we mentioned on previous shows there's a very real possibility that our market becomes one of the best performers globally.
Look, we can keep talking it up. Hopefully it doesn't. That's what we're waiting for. So
but it's positive, isn't it? That,
it is.
That they're running together.
Yeah, that's
finally.
what we want to see. More of that, don't we?
Yes, for sure.
So healthcare, that's one of the laggards, as I said, down 2.8%. Utilities is the one at the bottom. So we've looked, there's a few interesting stocks in there to keep an eye on as well. But, you know, you can't look past real estate as well. Eventually that will give more opportunities. So I think there's just a whole lot of exciting areas at the moment in the market. But the one that I want to really draw your attention to at the moment is materials. And obviously this chart is dominated by BHP, Rio. You've got FMG in there. Now, how can a market or stock go sideways for so long? And I'm just looking for, I'll use this horizontal line here, but you know, we're talking about a market going sideways since 2021. We know our overall market went sideways for 3 years. Now we're seeing materials still stuck in that sideways move. And our market shot out. There's got to be a lot of pent-up opportunity coming from this area, and we're all just waiting patiently for that. So just keep some cash there or get prepared to think about, well, what am I going to dump out of the portfolio so that I can buy some of these stocks?
Very interesting.
Dump out.
You're totally right. I mean, there's going to be so many opportunities on materials. We are seeing some of the big stocks especially bottoming out. So important stuff to look forward to. But that is it for our thoughts on the Australian market sectors. Now let's jump into more stocks and answer your questions. Will writes in about CYL. I've taken an entry at $3.62 and I'm wondering if you think it has more to run even with its massive rise last year. Now the volume has seen a big increase from before 2024 also. All right, Pedro. CYL, big volume.
Interesting.
How much more's it got, mate?
Yeah, man. Yeah, it looks like a lot of volume's coming into it now. We actually marked it on the chart down here on the weekly chart. And I'll expand that out. We'll spend a bit more time on the weekly chart. And he's totally right. A lot more volume coming in. as this, the stock has been rising up as well, it had a bit of a pullback back here in 2024, and as he said, it's shot up from that 2024 low. But we've had multiple weeks up now, and the stock is looking a little bit extended. However, I do like it. It's
done that in the past, though, hasn't it?
It
can
has.
go up 5, 6, 7, 8 months, and then
Exactly.
before it has a pullback. Maybe it's going to have a pullback and test that prior high and then take off again.
It could very well. This is a momentum at the moment.
So is that one of the beat the chest sort of trades we're talking about here?
Here's a question for you, because to me, these are one of the hardest trades to do, right? Only because where he's bought the stock, you got to ask where he's got the stop loss. And like you both mentioned, given 6, 7, 8 weeks up, at some point it's going to pull back.
Yeah.
Now the question is, where have you placed that protection? Is it going to pull back and take you out before it continues on up? Or have you placed it with enough room for the stock to move?
Really good point, actually. But
I hope so.
what Phil's talking about here is the nearest trough there is 31% down. So that's really waiting for that to come back. And often these stocks can come back to the angle of the overall momentum of the stock, moving up, but it's a long way down for it to come up there. So you wouldn't want it to be sort of pulling back right now at this stage. You'd want it just to keep pushing on before it does that.
Are you thinking the quicker? It's probably a better, application here to look for an exit sooner rather than later.
Well, there is no exit, right? So he's stuck in no man's land. He has to stay there.
Blue sky at the moment. But I mean, just on the other hand, when would have been the best entry? It's kind of hard to take the entry down here. I think he waited for that high to get broken.
That's very cheeky of you to say that, in hindsight, to tell him to
he should have taken it down there.
Wow.
But I understand what he's talking about. He's probably waited.
It's a good entry, and you've done well. As long as you keep your protection in, I think the trade will continue on to do good things. But anyway, thank you very much for your email. We do now have a caller on the line. Welcome to the Australian Stock Market Show. Who have we got on the line?
It's Matt. How you going, guys?
Good, Matt. Thanks for calling in. What's your question for us today?
It's to do with Magellan Financial. I'm not in the stock, and I've just got a question around margin lending and this kind of stock. Now, I've done a bit of backtesting on the stock, and I noticed it fell around 20% last week, back to one of your momentum lines, Phil. And it regularly does that. And I kind of... it's not a stock I want to trade with a margin loan, but I'm kind of interested in it too because it was one of your hot stock tips. But I just think with 20% falls using a margin loan, I think that's a bit too much to use as kind of a stop loss as well. So I was just wondering, I know you can't give out financial advice, but would Magellan be a stock that you would trade with a margin loan? I'm thinking kind of no, but I just want to kind of get your opinion on it just because of the 20% falls that it regularly has. It's a stock that's a bit volatile. It has quite big pullbacks, but I'm also looking at the stock as well a little bit interested because it's making higher lows regularly, and it's following that momentum line pretty well and respecting it a little bit. So I just wanted to get your thoughts around that type of question.
Yeah,
mate,
makes
sense.
It's an absolutely fantastic question. Thank you very much for calling in, and I'll get Janine, the expert on leverage in this studio, to give us your answer. But I mean, honestly, this is a fantastic question because he's thinking about the stock that he's about to pick up. What are the implications from a volatility perspective, and how that's going to play into the leverage side of things?
Yeah, that's a really good point.
Thinking about great things here. Is he on the money? Is it a stock that you do this with, or no?
Look, generally the stocks that are better for leverage are ones that pay good dividends and the bigger cap stocks. They're the ones that ideally you want to be doing with a margin loan. Stocks like Westpac or NAB, the big banks are good. Less volatile. Some of the healthcare might be okay. The miners once they get going, but that's just a waiting game at the moment. So I think you've really probably already thought about this and potentially answered your own question, Matt. And I know you think a lot about these things, but when I look at Magellan, because of the volatility, I think there might be a point where you could decide where is it less risky. Where is the trend really well established such that something's changed. And at the moment, the volume is not really supporting that, I don't think. If the volume starts to consistently be higher, because you see there's high volume on the selling, and we just open that up a bit, but it's still patchy volume compared to what it was back there. But I think if the nature and personality changes, and it may have to get through this high to do that, then potentially down the track it may be able to be put as a margin stock again.
Yeah, and I'll get your thoughts, Pedro. Is now a good time to be looking at it, given what's happened over the last week, that huge fall? Does that give you the, I guess, confidence to put that line in the sand moment for this stock and say, hey, if it turns around from here, maybe that's the time? If it doesn't...
Yeah,
no.
well, look, it's tempting because if you put all your analysis on a stock and you quite like it, and then you see a down move like this, it's very tempting to say, well, now it's cheap. I'll just get into it because before I was willing to buy, now it's even cheaper. But there could be underlying issues. I believe that they did come out with a report, so that's the catalyst for this down move. And I'd also like to add that with margin lending, you have to maintain that loan to value ratio, and if you do, if that stock does fall to a certain point, it's going to take you out. I mean, your broker is going to take you out. Plus, you can also loan against the underlying assets. So if you've got these higher market cap stocks, like Janine mentioned, you can actually borrow more on top of those. There's not financial advice, but in some of them, like CBA, you can borrow up to 70%. But
just
with these lower ones,
very mindful of market cycles in doing that, because remember what happened in the GFC. The increase in the lending that went into the stock market and caused the acceleration was massive. So we just need to keep an eye on what's going on in there. But that's more big picture stuff, not specifically related to the decision about this one.
And I think he's on top of the strategy there. But just keep in mind also that just because it has been respecting the trend line, it doesn't mean that it might every single time. So you keep an eye on that as well. We do now have another caller on the line. Welcome to the Australian Stock Market Show. Who have we got on the line?
Hi, it's Michael.
Michael, thanks for calling in. What's your question for us today?
Hi, so I just want to ask if you guys can look at fmj.asx.
Yep.
Because I entered in at $20.20 around mid-December, and because I thought it was going to follow its pattern where it falls to the support and then it goes up. But yeah, it hasn't done that. It's kind of like middled out, so it's not really going anywhere. I just wanted you guys to have a look and see if you guys thought it was going to go up or not.
Yeah, for sure. Great question. I'll definitely get the team to have a look at that. Thank you very much for calling in, Michael. Now, Pedro, almost forgot the name. Pedro.
Yeah.
FMG. Now,
FMG, yeah.
The interesting part about this question is it fell to support.
Yes.
Picked it up at support.
Yep.
Thoughts around that? Was it a bit early? Right
well,
on.
Just to enter purely on support, it's probably not the best thing to do, but it's great that he's looking at those support levels, just as your overall analysis. Probably better to do a bit of back testing to see what would have been a good type of entry for this stock. But I know that it can be hard because FMG is a very hard stock to try to find an entry for.
How many people, out there just out of interest, buy off support levels? There's a lot, isn't there? Try to buy off lows only to see the share price fall away again. I'm not saying that FMG will, but it's consolidating at the moment, could go either way. But that's really a higher risk strategy.
Well, you nailed it. You nailed it, because for each strategy there is a level of risk, and when you're doing that kind of strategy, you have to accept that there is much higher risk going on. But when you look at that chart, it actually looks not bad.
It looks interesting, but it needs to get over. And we covered this one, didn't we, in our metals show that we did. So if he hasn't seen that, it might also be beneficial to go back and have a look at that one.
Yeah, I think that we should have a look quickly at the weekly chart, because this pattern is quite interesting, what's happening over here. So he picked it up at that low there. No, actually around that 20 bucks. 20 bucks. So 20 bucks, that's not, I can see that that's a level of support back here, but as we know, support becomes resistance. So, if you would have, I'm not sure where that entry was actually, if just because it broke above it, but you have to know that there's always somebody on the other side. You're not the only one looking at support and resistance levels, There's always a big instos, institutions and so on that are on the other side of that trade. So right now, that looks like a very strong level of resistance at the moment, not so much support. I wouldn't be happy until the stock actually trades above it, and it could actually get stuck in a sideways move.
So just quickly, if you are holding it right now, maybe some pointers on if it breaks down past a certain level, you're thinking it's more risk on rather than keeping it?
Yeah, good point.
Or risk off, because you've got to then decide that you're going to get rid of it. So what are you going to do if it does fall away? And just be clear about your stop loss and how much you're willing to risk, not just from a percentage point of view, but from a dollar point of view as well.
Yeah, exactly. And my line in the sand would be this $17.60 level. You can see a bit of consolidation here. Usually stocks in a downtrend might consolidate for a while before it continues the downtrend, but it could actually reverse the trend. So keep an eye on these two levels, $20 and 17.6.
17.60.
Good advice.
Fantastic advice. All right, well, next up is Gavin's email. I am looking at Atlas Arteria. This stock has recently broken a long-term downtrend line and given a buy signal. However, there are several levels of resistance not far above, so I think it may be a little bit premature. Can I please get your thoughts on this one? All right, Janine.
First of all, I'm in love with this stock, so just have a look.
Biased.
From a trend point of view, I think it's a very interesting choice. I mean, look at what it's done in the past. Doesn't always mean that it's going to repeat exactly that in the future, but it does trend well, even when it's in a decline. You know, if you're shorting it, that's another thing. You'd think you might be able to get some easy money on that.
Look at that double top as well.
Well, that's right. But, you know, this trend, is it finished? And that's the real question, isn't it? We don't know yet. But let's just go back and have a look at what we're talking about here. And I'll just fix up the chart there so you can see. Now, this horizontal line is the potential significant resistance that's overhead at the moment. While it's gone through this trend line, it's very early days. It hasn't come back and tested. Each time it's tried to take off, you see this bit of a sluggish move. It's pulled back again, taken off again and pulled back again. So this is the first time we've seen 1, 2, 3, 4, 5 weeks straight up, 1 week down, and then it's really it's not showing that it's continuing the push up yet. So I think it's just early days, and I would really wait for a more defined move. More conservative entry, as you say, would be through here, but it could just move up and test that line and then come back and provide the further support check that we're looking for.
Would it be worth putting it on your watch list? Would you put it on your watch list?
As I said, I'm looking at it.
Is it the Keanu of the charts?
Cheeky, man.
He's just going there, isn't he? Keanu Reeves is talking about it. It's just an in-joke that's a bit of, passion of mine.
Well, yeah, if you didn't know, now you know who Janine's favourite actor is. But anyway, that is it for our take on ALX. Now for tonight's topic. We can all do with a bit of extra cash right now. Some exciting top ASX 200 companies are cashed up and ready to dish out impressive dividends this year. But could your dividends be under threat? Well, according to CommSec, Aussie companies are expected to deliver over 80 billion in dividends in financial year 2024, which is up around 5% from the previous fiscal year, calling it a dividend deluge in 2025. Now, reporting season has kicked off already, and dividend payouts will be a major focus. If it's income and growth you're after, now's the time to ask yourself, do I have the right mix of stocks to pay the best dividends? But it's not just dividend data that's important when selecting stocks. Just because the current yield may be in line with what you might expect, dividend payouts can change. So remember to put more emphasis on a company's earnings growth when making decisions. This is crucial to whether the dividends are reliable. Ideally, you want positive earnings growth and stable payouts at or above the previous year. Now, Morgan Stanley have forecast a return to 10% earnings per share growth in 12 months, whereas Citi expects overall earnings to be subdued in 2025 at 0.5%. and up around 7% in 2026. Now, this reporting season forecasts indicate a bumper season for dividends. So for investors, Australia continues to be the best place to invest for income. What rate of return should you be looking at before you buy? Consensus indicates that at or above the market average of around 4.2% to around 8%. Above that, you will be taking on much higher risk. What investors need to know is that over the past few years, scores of Australian companies have chosen to undertake share buybacks rather than distribute surplus cash in the form of a dividend, including NAB, Westpac, IAG, Suncorp, QBE, to name just a few. We view buybacks as providing a greater benefit to companies, not their shareholders. So are we likely to see an increase in the number of buybacks? And how can you tell if your future dividends are under threat? Step 1, keep an eye on company announcements to see updates on dividends. Step 2, follow step 1. So what can we expect from 2025? Will yields rise or fall? It differs for each stock, but expect yields to fall if the share price is rising, unless the company boosts the dividend, and the opposite occurs when the price falls and the yield rises. Morgan Stanley predicts the average yield will be closer to 4.2% this year. Also, if a stock is fully franked, add 1.8% to the return, including franking credits, which is tax already paid on the earnings. But how do you select the right stocks with high dividends? Number 1, know the level of income you want from dividends. Number 2, research the company's history of paying dividends. Number 3, payout ratios. Ideally 40% to 70% of company profits. Anything over 80% may not be sustainable. Number 4, higher EPS growth can provide certainty about future dividends. And number 5, the sector is important. Historically, some sectors have higher payout ratios due to higher cash flows. But which of these takes highest priority for you? Janine, what are your thoughts?
Well, Phil, you got me, but I'm going to say none of the above. After all that, you worked so hard to get all of that out.
I did work so hard. I'm hoping you can say something. But, I mean, what's interesting to me is, the 5 points, obviously, that we spoke about, because it is important knowing what you want and what you want to get from the dividends, because really at the end of the day, without that, you're flying blind, if you will.
Exactly. And so it's really about why. Is it really the income that you want? You've got to be honest with yourself about that, and what level of income do you want is important. But, there's no point picking stocks that have high dividend yields when you're taking on high risk. So that's, for me, is the big one. It's looking at the chart to see whether it's the right time to buy is always the thing, regardless of whether you get the dividends. And NAB is actually a good example of that, because with NAB, it traded sideways in this huge volatile pattern for many years, and investors just sat on no capital growth, but they were getting some dividends, but risking what? Big dips in the share price is a real no-no, even if you're looking to get dividends. So it's always about that capital protection first in my book.
Yeah, and in terms of researching, for the history of the company paying dividends, I'll get your thoughts on this, Pedro. What would be, from a practical point of view, the best place to go to if someone is looking to say, hey, I want to see dividends that have been paid in the past? Where can I get this information from?
Oh, well, the simplest place is Market Index, and that's the one that we use. And you can actually see a list of all the dates that it pays out the dividends. It usually they're paid out twice a year. And you can see if it's got a consistent track record of paying out those dividends. At any point, has it said, no, we're not paying them out, we haven't got enough cash flow, or we're doing buybacks instead of paying out the dividends? So really, that will tell you everything you need to know. There's other websites like Morningstar and so on, but Market Index is probably the easiest.
And often the market talks about, there's rumours about whether there could be a special dividend coming out. They've got all this extra cash there, and then the institutions will sort of stamp their feet or give hints and say that this is what we want. They usually win. But if you're an income investor, you want the stocks that are more generous in giving those payouts at times. So just keep an eye on the history is also a good way of looking at it, to see whether they have a history of doing that. Do they pay special dividends from time to time? And what are their dividend rates typically? But also with the buybacks, as you mentioned, Pedro, that can be an important one. And even though we don't like buybacks if we're wanting dividends, sometimes they can actually help the share price. We've seen historically cases where stocks like BHP, the big miners, Woodside, have come out and they've done the buybacks, whether it's if it's on-market buyback, that may annoy some people while the price gets supported, and it means that you actually have greater value in your shares. If you're retaining those shares, then the value per individual share goes up, PE drops, and that can then look attractive on the market and could cause the price to go up, but that doesn't always happen. And if I'm looking for income or a balance of income and growth, show me the money.
Yeah, absolutely.
Yeah, sure.
And it's an interesting point you mentioned, because the trend is, as we saw, buybacks more so than the special dividend as a preference.
Well, BHP did a buyback at one stage, and it was right in a peak in 2011 when they just went into this massive decline for 5 years.
Yeah.
Okay, so some people might have been happy because they got what they wanted to get a buyback, and under certain circumstances it might look good, but when the share price is dropping,
And it's also about tax effectiveness for the company, right? So for them, it actually works out better to do the buybacks rather than paying out the dividends. Maybe not so much for the shareholders themselves, but you know, it does help with the company. I would prefer to get the dividend myself.
Yeah, interesting stuff. All right, well, how about we now get into our best dividend stocks? Now, I know the guys have got some fantastic options here, Pedro.
We sure do. All right, let's start off with New Hope Mining. So this one is paying out a fully franked, so FF, that's what that means, fully franked dividend of 8.46%. So fully franked means that they've already paid tax on this dividend.
Yep.
So when you get it, you don't have to pay any tax. You know, you get these imputation credits, but really go search that yourself. We're not going to explain all of that on the show, but basically you don't pay any tax on these. But it's like what Janine said. It might be paying out this great 8.46%, but look what the price is doing. It's actually falling. Even though the pattern looks interesting, you know, even on the weekly, it looks like it's consolidating sideways. It's not wanting to fall. However, it could keep on falling. So if you were to buy this purely for this 8.46%, you could just be buying into a decline. So what would happen then if you bought it around this area just because of the dividend? Right there already, it's taken out the dividend. So if it falls by 8.8%, which
it could take out that low, is what you're saying.
It could actually, just even go and retest that low, and there goes your dividend
when
already.
It drops.
When it drops. So, okay, you could hold on, but if you do hold on, like you said, it could keep on taking out that low. And what happens is that with capital gains, if the stock is going up, you're not paying any tax on it, but you're getting paid out this dividend, you're paying tax on it straight away. So you're already getting taxed 30% on that, or whatever your tax rate is. But at the same time, your stock is falling down, so you're getting hit many ways at once.
That's a really good point. I mean, if people are looking for dividends, it's always good to have the direction going, you know, up. Obviously, you want the share price rising, so don't get lured into that, is really what you're saying, isn't
Definitely.
it? But the fully franked thing, dividend, it is important for some people. They do want that franking. But in terms of the decline that you're talking about, you think it could drop 20% if it takes out that low?
If it takes out that low, quite possible, definitely. Like I said, the pattern looks interesting. It could actually pop out of that pattern on the upside, but you know, you've got both scenarios that have the same probability. So
I mean, and there's probably another argument in there to say that the fall's ended, the retracement's ended, and it's still in that long-term uptrend, ready to bust up.
Well, think about this. Obviously, the share price, when it starts to fall, the yield's going to go up. People will think, oh, I'll get in now because the yield's more, only to see it fall away more.
But if you buy in now,
they could turn around. But the company could turn around and cut the dividend. That happens so often, doesn't it?
Because it's falling.
Which would then add to the growth appreciation aspect of it anyway. So you're going to win on the other side potentially. So a lot to think about. But anyway, our next stock.
All right, next up we have BHP. So fully franked dividend of 5.5%. Now this one, it's looking like it's come back to some critical levels here. And if you think it looks familiar, this chart, well, it's very similar to what Janine showed before on the chart of the materials sector, because it pretty much is. So it's, if I can just grab that, around there. Around that $40 is a strong support level. So, you know, if you're a bit of a risk taker, could you justify just buying it for the dividend yield just around here and, you know, just riding it on the way up?
Do you want me to get my claws out?
I'm trying to poke the bee's nest here.
I thought you were going to say beast. I'm thinking, where are you going with this? I'm in the middle here. I'm eating the sandwich.
Yeah, it's a really interesting question, though, what you're asking is because, you know, long term, anybody holding BHP over the last 20, 30 years, generally, and I'm using the word general, it has appreciated over time.
Yeah, true.
So if you compare that to the majority of stocks on our market, this one's still, although it's done nothing, it's still trading near all-time highs.
Yeah, that's a really good point.
So the probability of an income play here is probably less risk, even though it is in the materials sector, than some of the others that swing wildly up, wildly down. I mean, thoughts on that?
Almost convinced me.
Almost.
It's a good argument. I like it. But how would you feel though if all of a sudden we see a really nice rule on the weekly chart trigger and we get the trend starting to move back up in the right direction? We've still got all of this resistance here to deal with and this prior high there. So someone who's looking to trade short term might try to get in close to the bottom, but you want to have a really good set of back-tested rules for BHP.
At the same time, if you get in a little bit higher, are you getting a lower dividend yield?
Oh, there you go. Do we care about dividends on BHP?
Yeah,
I don't think so.
I wouldn't, but just playing devil's advocate here.
Okay.
Yeah, well,
All right.
it is a dividend show today, so
Yes, we will care.
next stock.
So all right. Rio. Okay, Rio, it's actually the brother or sister, whatever you like, of BHP. But it actually looks better than BHP, I think, in the way that it's neater. And these highs, lower highs, look interesting. It's held up well. There's some resistance here we can see from that high in March 22. There's one in February 23, and there's the recent reversal that we saw with that big outside bar. I'm liking it. I'm waiting, being patient. It's on my radar for sure. Again, with this one, okay, you get a dividend. Don't really mind either way, but growth.
This one will be a growth play.
It's a good combination though.
Yeah.
All right, next we've got ANZ, a bank, obviously nice, clean stock, but hasn't performed as well as the other banks, and I still think it's doing a bit of a run-up. We had it actually had the takeover of Suncorp's banking division, so therefore it had a bit of a slowdown while all that process was going on, but that's nothing out of the ordinary. We see that quite often happen. 5.35%, but I was a bit disappointed to see a dividend that's not fully franked, if this is actually up to date and correct. That's
right, yeah, we did see that from Market Index, and 68%, that means that still on 32% of that dividend, you're going to get taxed.
So look, anyway, it could do really nicely over the next 6 to 12 months, I think, with ANZ.
Yep.
And give you a dividend as well. Now we've got STO in there, Santos, not one that people would often think, okay, this is a stock for dividends.
You know what I call this one? Spaghetti Santos. Right? Because that's what it looks like.
It does, doesn't it? I mean, it's just so volatile. That's what you mean in translation, isn't it?
It is. It's just, it's a mess.
So if we look at all of this resistance here, we can see that it's gone on for years with Santos struggling to get through, and we all know what the reason for that is. But there's no franking credits on this dividend, no franking. It's 6.59%, which is a good dividend still, but this is a growth play and dividend play, not just a dividend play, I would say, just because of the volatility of it. The risk is it could keep falling. It's got to get above that line at least. That's as a minimum for me.
So if the company becomes more profitable and the share price goes up, is it a possibility that they will change it to 100% franked? Does that ever happen?
Look, it can, but at this point, I wouldn't bank on it. I wouldn't buy a stock thinking that it's got a zero franking and then I could get franking later on, but really good point that you've raised there.
Next stock.
Next one is Pepper Money Limited. This is a different one and it looks really interesting, doesn't it? Some people actually really like this stock. They pick some of the smaller companies there, but it's got a really nice sideways consolidation, and you would look twice at this one from a capital point of view. Dividends also really nice, 6.5% fully franked. I'd be putting on my chart when these stocks are actually going to go ex-div so that you don't miss that date. That's really important. And also the date that they're due to report, if they haven't reported, is something you want on the chart.
And I would even say keep in mind to receive that franking credit, you're going to need to hold it for a certain amount of days, that 45-day rule, whatever it is.
That's right, and make sure you know what that means.
Yeah, because if you buy
get one day wrong and you miss it,
sell it a day earlier, you're not
yourself.
going to get additional income.
That's it.
Yep.
So true.
And look, let's just have a quick look before we move on to the weekly chart, and we can see it was trending down really nicely there, a little bit of consolidation. It's just broken out, so you haven't missed this one.
So you could lock in that dividend yield.
Check the dates.
Yep.
Okay, Genesis Energy Limited. This one actually looks really interesting as well, but it's higher risk, I would say, looking at it. because of the volatility of it, it's spent half its time going up and half its time going down, which can tell a technical analyst a lot about where this stock could be in the big picture, and may actually be to the big advantage of technical analysts. I can get spit it out. But if we look at the line that it formed when it pulled back in COVID, it's come back to test that again, which is a really good sign. Potentially a trend line there on the monthly coming up. Let's just have a quick look at the weekly.
And this is in the energy sector, right? Obviously, Genesis Energy.
Energy sort of gives it away.
Yeah. See?
But this is a really nice little pattern that we're seeing here. Now, in the past, it's done this sort of thing. It's pulled up sideways, gone up a bit, and then it's actually, fallen away again. So don't be fooled. Make sure you've got a good stop loss on it, but the dividend's good. Keep an eye out for that. If it falls, because it's a fully franked dividend, bear in mind it could fall 1.5 times the value of that dividend.
Yes.
Okay, APE. We've got Eagers Automotive, we've had on the show before. Some of you out there have actually liked this stock. If it's one that you're interested in, then obviously you'll be happy to see it on the show. Looking at it, it's got the volatility to give you good growth, but also has a high dividend, 5.7%, which is really nice, a fully franked dividend. The risk right now is there though. There's still risk with this, although 1, 2, 3, 4, 5, 6 months up now, which is starting to look really good. If you got a retest in some way, a little bit of a pullback, and then it took off again, there could be an opportunity in this one. But let's just have a quick.
It looks like it can psych you out a lot. There's a lot of wild movements that happen.
So psych you out. Okay, that's the first. So it's not a FOMO thing. What you're saying is it could be one of those stocks that has you guessing as to whether to get in or not. Is that what you're saying?
Well, that's right. And you could actually think that you've got an entry and you've entered at a good point, only for it to fall away. It's very choppy.
You've got a good point there, but the recent trend's really nice actually. It's making these higher highs and higher lows.
Yeah, so I just want to stick on that point that you said as a trader, if you do encounter those kinds of things where you said, it may look a bit choppy or a bit tricky, is it worthwhile maybe then just zooming out again, bigger picture, to then clear up the thing of the image of what you're seeing on that stock, because it's going to make trading it a hell of a lot easier, right?
For sure.
Exactly,
generally,
and maybe the monthly chart could be better.
Yes, but even the monthly chart, I mean, if we go back to the chart, just looked a little bit, you've got these levels up here only for it to fall away, then, it came up, fall away, came up, fell away, came up, fell away. There could be a little bit more to go, but I'd be looking out for those down moves as well.
Interesting one indeed. Now, Dexus is a stock that's actually tested this low 3 times. So it's come back down here in November 23, again in July 24, and more recently this year. So we're still not out of this sideways consolidation, waiting for that. It could come down and break below this low here. But if it starts moving up, this could be a nice little one, 5.4%, but you're going to be disappointed. 9% franking, why bother?
How'd they work that one out?
Yep, so that's one to question, but I would just double check that anyway. Just always double check the information that you've got on your dividends to make sure. Go to the company's website, check under dividends, and have a look at the history of what they pay as well, would come in handy. One thing I was thinking, Phil, if someone actually purchased a stock and they bought it specifically because they were hoping to get a dividend, and then it fell away, how many people still hold on to it because they bought it for the dividend, so they think, I'll just keep holding it until I get that dividend, and it's getting bigger. They think it's getting bigger, but it's not actually for them.
Yeah, and like you said, it'd probably be a lot, right? Because the intention behind the initial purchase was to collect income.
Yes.
So there's no real thought at all about, okay, I'm going to protect the capital on the way down. And I've even spoken to some people that, when they do buy for income, they almost completely negate or don't think or don't understand that, hey, if it falls away, I'm going to lose my capital. The income's not going to cut it, right? But yeah, it's all in the intention. I mean,
and stocks could move 10, 20, 30% to the downside, and you're getting a 5% dividend.
Well, absolutely. But the beautiful thing as a technician, as we all know, when you're on the charts, you can play, because there's nothing wrong with being a master of both. A lot of people decide, okay, I want to play the income game, and then completely neglect the technicals.
Sure.
But I mean, if you can overlay your income strategy with some fine technicals to know that, hey, I've got I was about to say a specific word, an ejection plan.
That's fantastic. Glad you got that right.
There was a few letters that I completely messed up in my head, but if you've got a plan to eject, when you know the parachute that goes out of the plane, that one. So if you've got that plan in place with your income strategy, then there's no
Yeah, I
reason
know.
why you just can't get out, forego that income, and
Yep,
then move
I
on to
agree.
the next one.
I understand.
The word I was trying to say started with a J,
Yep,
ended
yep.
with a J in the middle, but that's not
You
what
better
we're going to
quit
say.
while you're ahead.
Next
Yeah,
stock.
Next one, let's do it.
Okay, Origin.
Talking about that, Origin.
All right, Origin Energy is a really nice little stock. At the moment, it's come back. There's a bit of a sell-off in the share price, but it's holding on. We've had a situation where it's risen for multiple months, pulled back for only 3 or 4, risen again for 3 months. It's down for only 1 at the moment, but it pays 5.4%, fully franked. It's good dividend.
I
It's
like
still in
this.
an uptrend. Yeah, we both like this one. So let's just wait and see, because Origin could turn around and return to that trend.
All right, AGL.
All right, last one, AGL, another utilities one, 5.21%, 0% franking. So there's no franking in there if that's what you were hoping. Just remember that. So this is a growth play, but with some dividend. Just keep that in mind. We've talked about AGL on the show. Obviously, at the moment, it's sort of in a bit of a stale position because it's pulled back. This was back in September. It's really struggling to move on at the moment. I would just watch and wait and be patient.
Yeah, definitely. I think that you could justify an entry above that line for sure.
Now with this one here, could you justify buying this one purely for the income play, given that it's coming off a really nice uptrend, albeit not as long as the fall that has happened,
No.
but no, you're not going to justify
I'll give you a
income?
no. One, because of the volatility. For a start, if you just look at these trends up and it's
Right.
really stretched, the volatility, it can do the, worse coming down. It can retrace all of that prior range if it pulls back. So the answer would be not just for a dividend play. You have to get the timing of both right.
Yeah, excellent stuff. All right, well, moving on, if you want to talk about a stock or ask a question, pick up your phone right now and give us a call on 039290 9988. That's 039290 9988, or you can text the number on your screen. Now, whilst we wait for your call, let's get into our next email. Jimmy writes, I had a conditional falling sell order for Zip 2 weeks ago with the trigger set for $2.65 and the price limit of $2.64. Now this was triggered when the stock immediately jumped back up to $2.74, therefore my order was rejected. Now is this normal and have you guys experienced this? I have spoken with the broker and they say the reason for the rejected order is because the price deviated too far from the limit price, but I thought the order would stay in the queue. Now, this is a very interesting email, but let's just try and simplify it a little bit, Janine, because if the order's been rejected, and we're speaking now about price continuing to unfold, to me the question is, has the order been rejected before all of what's happened? Jimmy is referring to what has happened, or is that after? Because once you put a conditional order in, realistically, if it's triggered, it should leave the order in there, right?
Yep. And this is a really important lesson, Jimmy, because you look at the fine print for a start. Always read the fine print. CommSec are pretty good with putting the information on their website. If it's with CommSec that you're, I'm not sure if the guys said that you were, but we were having a bit of a look online just to see what they were talking about today, see if we could find that. But it's more than likely that that's rejected at the start, like Phil's saying. However, you didn't really give us enough information in your email. And the important thing is to go back to your broker. Get it from them so that you fully understand these things, because you're the one that's going to be trading with your money on the line, and you really need to know what's going on if you're placing these types of orders, which I don't place these types of orders, do you?
Yeah, and that's why I said if you've got a conditional order with the broker that I placed the order with, then it should, if the trigger is hit, it should put that order in the market. Now, again, I don't know which broker is trading with, because each broker might have different rules. So as Janine said, it's
so what would you? So let's go through the scenario.
Yep.
If this happened to you and they wrote that back to you, what would you want from them?
Well, to be honest, I mean, I'm not exactly sure what they did write back to him, apart from the order was rejected because price deviated away from current. So that's a bit of an explanation in itself, and that can be, I guess, the reason. But to me, in my experience, anytime an order has been rejected.
But that's bloody frustrating for someone who's trading and not to have a proper explanation, a full explanation of what had actually happened. You know, show me how that didn't work is what I would want to say. Explain it and send me an email, give me the information. That's so. Go back to the broker. Really, is the point, isn't it?
That's the best answer. Go back to the broker to find out more on that. But we do now have a text from Jim, who is asking thoughts on SOL. I don't own it, but I am watching it, consolidating at the moment, and looking very interesting. Could this benefit from money filtering down from those financial stocks that are in blue sky? All right, this is an interesting stock style. We've had this as our hot stock tip last year, once or twice, and I believe it's still in a very nice uptrend. So
yeah, like you said, it is consolidating, but I think it looks nice. So this is a nice company that actually invests in multiple areas, and I like the way that they manage their investments. I've actually had a look at their prospectus and so on.
Yeah, right.
Great company. I think that it is just going through a bit of an accumulation period here. I don't believe it's a distribution. I can't see this stock really coming down below those levels.
It's amazing how long it's hung in.
It has. You know, that $31 level, $32 level has been a very strong level for this stock. You know, it does have these beautiful run up after these lows here. So we had that same type of a scenario here where we had that correction and then came up, but it's just very similar to BlueScope actually, the way that it actually has come up from that low, but it's just been consolidating sideways.
Well, let me ask you this question, because it did mention about the fact that the other financial players have been rising, and they have, the big four banks, and he's asking whether this one could be a bit of a lagger with, you know, room to move on the coattails of that. But, you know, I'm going to flip the script on that and say you can also ask the question, if the financial stocks are rising and the big four banks are rising, why isn't this one doing it? It could also be a negative, right? Not just a positive.
Well, you have to look at the individual businesses and determine what the driver is for that and what's being said in the market as well, what the fundamentals are for it. Could have a big impact on that. So
you've got to compare apples with apples as well, right? This isn't a bank.
Yeah.
It's more of an investment company. I'd actually compare it to Macquarie more than the other banks.
Well, Macquarie's flying.
Macquarie's flying. It had a bit of a pullback the other day. So yeah, exactly. It hasn't kept up even with Macquarie. So definitely take a bit of a closer look into why it hasn't been. But from a chart perspective, if we go to the weekly chart, it has been just consolidating sideways. But I do like the fact that it hasn't fallen below that level and it's keeping up. So I'd just be watching it.
Sometimes stocks have to fall in order to rise. It's because of that resistance. So sometimes they'll drop through these levels only to then make the bottom and then off they go again.
Like a final blow-off type. Yeah,
good
be
point.
interesting to see.
All right. Fantastic text anyway, Jim. We now have another text from Martin, who is asking thoughts on VAU, short-term trade towards 49 cents. Any advice if it isn't extended and smart to wait for brief consolidation? Or is it sometimes okay to join the run if target price not far ahead? All right, this is a very interesting question.
It is a good question. So if a stock's taking off, do we just jump on and go for that? Look, it depends on your gut really, how much you can handle on the roller coaster ride. Just looking at the chart there so we can go through this, you can see there it has taken off nicely. There's no test of that low down there, which if we open up the chart, it's a long way away from that. It's been going up now for so many weeks. But, you know, I mean, you could be absolutely right. It could be, you know, just take it and see and then just set a stop loss based on your percentage. It's broken out of all of this. It could be on its way. There's some more resistance overhead. You just have to be prepared. And this is one of the things that in working through trading is to think about the scenarios that could unfold when you go into a trade, not just thinking, okay, I've bought the trade, I've got a stop loss, I know I've got an idea about, my analysis tells me what's the upside, but prepare yourself mentally for if it pulls back, how far could it pull back? Am I likely to get taken out on the stop? And prepare yourself that if it does, you're going to do it. If it rises and goes really strongly, don't shout from the rooftops how good you are. You know, that's a really important lesson too, because the ego can take you away and that can affect your trading for the next trade.
Yeah, it's such a great...
You've had that experience, haven't you?
Oh, yeah.
With Drone Shield.
I was in my own world for a second there. But, you know, that is such an important point you raised, because the higher you chase a stock up, the more likely it is at some point to reverse against you. And then it becomes one strategy, as you said, but two, you know, the discipline in yourself to go, you know what, there is a high probability, the higher I buy it, that it's going to get a pullback. Am I going to be able to stomach that? Am I going to be disciplined enough to, transact through that. It all plays into it. It's so important.
It does.
He also said a very fundamental thing in technical analysis, which is always trade with the trend, right? So in a basic essence, he is trying to follow the trend, like a trending strategy. So I congratulate him for that, for actually looking at that underlying trend.
Great.
Great point. All right, well, our next question is from Jack. Has IFL officially turned the corner in your opinion? It has found support at the $2 level and has gone up strong. So is now the time to get in? All right, Pedro, IFL.
Oh, yeah,
Ready?
IFL. I always get
Too
this
late,
one.
she cried.
Too late. I've cried over this one so many times.
Well, here's another chance.
Here's another chance. So thanks. I had a look at this stock, like I said in the past, around that $2.70 level. I didn't choose to take an
And
entry.
I told you about it, and then I didn't take it either.
So there you go. We can cry together, right? Janine actually told me about this. I was going to do a report on it.
Yeah.
And I said, this looks great. But then kind of shelved it.
Yeah.
Didn't think much of it, and now it's taken off. Probably would have doubled our money. So there you go. So good lesson for us. I think that it's it's gone vertical at the moment. I wouldn't be looking at an entry right now, just because you've got all these levels up above. If I just expand the chart out a little bit, this level would be concerning me right here. That's around that $5 there, and really, can you justify an entry when you've only got that kind of 10% upside, and you've got this massive gap down there at 20%. So right now it's not looking very nice.
Yeah, probably wait for a better opportunity, you're saying.
I'd wait for a better opportunity, see if he comes back and fills it. If Janine comes back to me, gives me another stock, I'll look at that one. I promise I'll get in.
Great. Nice. All right. Well, keep them coming. We now have a text from Brad who is asking thoughts on PTR. Purchased at 38 cents and had a drop to 26.5 cents. Will they see a bounce back? All right, Janine, PTR.
Yeah, right.
Purchased at 38.
I'm just speechless right now.
Is that a good speechless? Or?
Just have a look at the chart. Purchased at 38 cents, so it's right near that high now. I would really be feeling for you at this moment. So I was just, thinking about what to say to you. So in terms of the downside risk, it's really hurting right now. And you might have thought this was one of the next drone shield or the next one of those big stocks that just takes off, and it could have been, but not this time. It doesn't mean that it won't be in future. Right now, though, it's about managing risk and deciding how much you're willing to give away, just in case it does keep going down.
Well, in his question, he also asked, can it bounce back from here? So to me, there's a bit of maybe potentially buying in on the hype, and now not really having that plan. Asking the question, I hope it comes back from here. So, from your experience, is there any advice you can give when traders are looking or investors are looking at these kinds of moves? From your perspective, some tips on how to best navigate this scenario again if it comes to him. Is it more of a feeling? Is it should he follow the feeling, or does he need a plan?
No, the feelings, forget that. Okay, just try and stay away from that, trust me. No, really what you've got to do is have that plan documented. And for these type of stocks, it's got to be black and white. Be really hard on the stock. Don't think of it as being hard on yourself. Think of it as being hard on the stock, and make that a bit more external for yourself. And strictly thinking about those stop losses. Could it turn around and find support? I'm actually going to just have a look here. I want to go to a shorter time frame and see. It's just come back to fill that gap there. There is a chance that it may, but I don't know what the reason was for this big sell-off in the first place. Is it something that's, it's not going to recover from in the near term because of the market and the way the market viewed it? Or is it short-term volatility we're looking at? I'd want to know the story first, and you'd want to see a few weeks up, but what you have to really be mindful of is you could end up chasing it to the downside if it goes up and then pulls back again.
Yeah.
So it's really like, I don't want to say toss of a coin, but once you've, let your stop loss pass your stop loss, that's really what it is. It could, with a stock like this, it's so volatile.
Anything can happen. All right, we now have another text from Andrew, who is asking thoughts on KAR at an interesting level, and I think that I will wait for another trough, then moving above the previous recent high for more confirmation on the entry. All right, Karoon Energy, Pedro.
Yeah, this one's one that I've been following,
Yes.
right? And I do quite like it. So I'll go straight onto the weekly chart.
How come
for
you
this
didn't
one.
tell me about this one? It's sort of like, swapping ideas here. What's going on?
Mate,
Well, you let that other one slip away from me. You should have
wants
just
to pay you
Yeah,
back.
exactly. I'll tell you when there's a good opportunity. Right now, I agree that you probably want a bit of a retest before you get in. But, I do like the fact that it's kind of breaking above this kind of momentum here. So we've got that earlier momentum there, but then we've got that gradient that it's moved down into, but it's actually broken above it. And now, as usual, whenever you see a break above these type of momentum, we see a retest, and it's already done that. That's what I love about it. Sometimes you see this, people wanting to get in over here, and then only for it to fall away again, and then maybe get out and then miss that next move up. So I think this
Tight
is a great
stop losses, but it is higher risk.
This is a bit of a higher risk. I don't think it's one that's in it's not a very micro cap.
Just because of the sector.
Of course, energy sector, but we are expecting that to do good at the moment. This does rely on the oil
This year
price.
or next year?
I'm saying this year. I think that this year energy is the way to go, just with everything that's happening with AI, all these new tariffs and all these things that are happening, geopolitically. So I think that Karoon would be a good one to benefit from that. And they are in a good position to capitalize off this.
Yeah, interesting. And I mean, even that volume was really large right near that low. So that's something else
coming
to
off.
keep an eye on. Great stock there. Great pick, Andrew. Anyway, remember to send your questions to info@wealthwithin.com.au and we will answer them in next week's show. Now, here's what's happening next week on the Australian Stock Market Show. Next week, we get into banks versus tech stocks, which will deliver 10 to 20% growth in 2025. If you love our show, remember to hit that like button, subscribe to our channel, and be sure to tell us your thoughts in the comments below. Well, thanks for joining us tonight. We'll see you next week on Tuesday at 7 p.m. For now, goodbye, good luck, and good trading.